Interest rates really suck right now. If you go back simply 2 or 3 years, you can see you could have bought a house with a 3 to 5% interest rate. And now looking at them being almost 7, it's just deflating to even think about buying a house. As a matter of fact, most people I talk to are just like, yeah, we want to buy a house and we have the money for it, but we just don't want to get screwed with the high rate. What if I were to tell you I bought a house at 5% interest rate, not using my money? Hey, Kyle. Or should I call you Mr. Win the House You Love?
Mr. Win the House You Love is my father.
You're just Win the House You Love.
Yeah.
Why do you sound so tired? Are you training for the Handsome Squidward lookalike contest or something?
Dude, it's exhausting.
So I want to buy a house with, like, I don't want to be paying 7% interest rate. I want to pay as low as possible. How is it doable? How can I do it?
So you can do what's called an interest rate buy down. So I like to think about it kind of like prepaid interest. So basically, you're going to pay the lender up front, and they will lower your interest rate. So lenders have a chart that actually shows them all the different interest rates that you can get, and then the costs associated with that. So it's given in what's called points. So 1 point is 1% of your loan amount. So 1%, 1 point, will change your interest rate by about 0.5%.
That's like is that for sure every time, or is it different depending on the price and whatnot?
It depends on the price and a lot of factors, but it's kind of a general rule of thumb. A lot of people think that if I buy down 1 point, that their interest rate will lower 1 point, and it just doesn't work that way.
And do I have to, the points, do I have to pay them out of my pocket, or can I have someone else pay them?
Yeah, you can pay them out of pocket. Your lender can't really pay it because if the lender was going to give you a credit, they would actually increase your interest rate to give you a credit towards closing costs. The opposite direction, you would pay money to the lender to lower your rate. But you can get money from the seller. So in your purchase contract, you could negotiate for the seller to pay a percentage of the home price towards your closing costs. And in that, your discount points would be included as closing costs. So,
Perfect.
Maybe that you could negotiate 1% of the purchase price towards your closing costs.
All right. So basically, I can just get like 20. I can get as much money from them as possible to buy the interest rate that I want.
Yeah, absolutely. Or you can put that money into closing costs. All the other closing costs if you want to. If you don't want to have as much money needed to bring to closing. Awesome.
Thank you, Mr. Win the House You Love. I appreciate you.
You're so welcome.
The number that was quoted to me as of this week is if I wanted a 5.25 interest rate, I needed to give them 4.2 points. And if I wanted a 5.5 interest rate, I needed to give them 3.5 points. Now remember, a point is essentially a percentage of your loan amount. So if I wanted to buy a $500,000 house with 10% down, 4.2 points would be about $18,900. So in other words, about $20,000 bribe to the lender to give you the rate around 5%. So let's summarize the cost so far. For a $500,000 house, I need to put 10% down. The closing costs are estimated to be about 2%ish. So we'll add another $10,000 for closing costs. And of course, let's not forget the lender's bribe of 4.2 points on $350,000, which would be $18,900 smackaroos. Let's add another $1,000 for appraisal and inspections and whatnot. So that gives us a grand total of about $79,900. So about $80K to get the rate that we want. So now that we know how much it's going to cost to get the rate that we want, let's find out our strategy for actually finding a house that's going to give us the moolah. Now, in my specific market, we can look at the data and find out that 41% of all houses are giving concessions amount, but the median concession amount is $8,000. So remember, we're going to need $20,000 if we want the seller to pay for our rate buy down. But not only that, because remember, there's going to be an additional closing cost of like $8,000 to $10,000, right? So if we really want the seller to give us all the money, we need to get $18,000 plus, let's just say, another $10,000. So we need about $28,000. So let's pull up the MLS and see if we can find something. So what's the strategy here? Well, I don't think we should focus on new listings because sellers have this idea that they're like filled with hope. And when they first list their house, you can lowball them all day, or you can ask for crazy amounts all day. But they'll just say, "Oh, it's okay. We just listed. We'll wait. We'll give it another few more weekends before we just go with your offer." Right? I don't think they'll go for it. Should I call somebody just to see? It's gonna be embarrassing, but let's try it.
Hello, this is
Hey there, it's Javier with my home group. I'm calling you regarding.
It's vacant, easy to show.
I have an interesting situation with a buyer who is wanting a large concessions amount in order to help them buy down the rate, about approximately around $30,000 worth. Is that something that would be feasible with the house?
Probably not. 30,000 to buy down a rate seems unbelievable.
What if we were to increase the price on the offer?
I mean, I'm not going to tell you you can't show it or not to submit an offer, but that's a pretty tough one to pull off on an appraisal.
Gotcha. Okay, well, I figured I'd call and ask first.
Oh, sure.
Well, that kind of shows you the response you're getting. So what we have to do is we have to focus on the ones that have longer days on market. So what we're going to do here is we're going to go here, we're going to sort it by days on market. We're going to hit descending, and we're focusing on the ones that have more than 200 days. Why am I focusing on those? Because these guys are going to be a little more, antsy about doing something or maybe potentially getting a deal done. They're going to be a lot more flexible to work with. So I'm going to click on a few of these and I'm going to call them and see if I can get someone to play ball with me. Hey there, it's Javier with my home group. How are you today?
Good, how you doing?
Good. I'm calling you regarding. I wanted to touch base with you. I know it's been on the market for a while. I have a client who looks like they want to look at the house, but they're in a situation where they're trying to get their rate as low as possible right now, and that would require a consensus amount of about $20,000 to $30,000. So I'm wondering if your seller would be able to play ball with something like that, or should we not schedule a showing?
I can't speak for them, but probably the reason we're sitting on 5 is we figure it's probably going to trade. I do, and I've told him, between 485, somewhere in the 485 range.
Let's give you a list price offer at 25 concessions, and we got a deal.
We see if we can pull that off. Well, it's there to be shown, so what the hell?
That's all I need. All I need is a chance. All right, well, let me see if I can get a showing scheduled. I'll talk to my client, okay? All right, after 10 calls, I finally got that call. We got someone that's willing to play ball. They weren't so enthusiastic about it, but why not? They gave me their bottom line, 480, 485. So, if we give them 500K, then yeah, we're going to have to ask for 20, 30K. And that's the thing is, you can't have your cake and eat it too. If some of you guys are trying to get 20, 30K of concessions and also get 20 or 30 off the price, something's got to give, right? I would love to pay 480 for it instead, but obviously we're doing what we can to get that rate way lower. So how much money would we save if we do this route? Well, first, let's take a minute here and acknowledge how absurd this video is. How absurd is it that we as Americans have to be in a situation where we have to beg a seller for $30,000 just to get a decent interest rate and an affordable monthly payment? Affordable, of course, is subjective, right? But if you think the interest rates don't really affect you, look at this, okay? If you're buying a $500,000 house with 10% down, decent taxes at $2,000 a year and about $50 PMI and $1,200 annual insurance premium, your payment's about $3,300. Now, if you are buying at 5%, your payment is $2,732. And if you're buying at 3%, your payment is $2,200. So just think about that. If rates were only lower and banks were making less money, most of these houses would be very much affordable. And how insane is it that prices have been inflated higher thanks to a lot of these cash investors that bought up a crazy amount of houses the last 2-3 years, and on top of that, rates are higher just to kick in the ass again, just to slap both of our cheeks, if you will. Anyways, I digress. So how much money are you going to really save here? Well, if we're looking at the first scenario, which is going to be 10% down, and we actually got them to do 5.25 rate with $30,000 of concessions, basically your payment at a tax rate of $2,000, $1,200, all those numbers there, your payment is $2,800. After 30 years, you're going to pay approximately $444,000 of interest. Okay, if you were to buy the house and instead of using those $30,000 of concessions that they're going to give us, but instead we use it to buy down the price even cheaper. Now, if you want to compare them, there's the difference right there. We're looking at a difference after 20 years of $90,000 and $112,000 after 30 years. Okay, it's insane. It's much better to put that money towards the interest if you're trying to save through long term. But it's just how insane and killer that interest rate is. That interest rate has no business being in the 7%. It just makes so much more sense to do the 5% rate because the interest paid is significantly less. Look how crazy this is, okay? After, between years 10 to 20, your balance for your higher priced, like $30,000 more on the mortgage, actually is lower with the higher purchase price than it is with the $30,000 off. So basically, somewhere between years 15 and 20, you actually passed your lower balance of the other house that you bought for $30,000 cheaper. So with this house being over 200 days on the market, I'm fully confident we can negotiate with them. Probably not just off just the $30,000 of concessions, but maybe just slightly a little bit under the price. Who knows? We'll see. What do you think? Is it worth getting a rate buy down, or should we just avoid buying a house altogether until rates cool off? And if they do, when will that happen? Who knows? We'll just have to stay and watch out.
The main problem with putting all of your hope in lowering the interest rate with paying an excess amount of points is that there's a break-even period, right? Like if you paid $20,000 up front, well, but you have to look at how much are you saving monthly in interest because you paid that money and you lowered your interest rate. So there's a break-even period to it. So the more money that you pay down in points, the longer the break-even period is going to be. So what I saw happen a lot over the past couple of years is people would buy a home, put a ton of money in points, and then interest rates would lower and they would refinance before their break-even period was up. And so they lost money doing that. And so what you're really hoping for is, if you're paying down points, is that you're basically saying, I don't expect interest rates to lower, because in the future, you can always refinance to a lower interest rate. And paying points is basically you kind of gambling of sorts, saying, I think interest rates are either going to stay the same or continue to go up rather than go down.
So maybe you don't have to be as dramatic as me and go and get 4 points from the seller and have to go get 5 point something interest rate. But maybe you can meet somewhere in the middle. Maybe you can get half of that's worth. Maybe, like Kyle recommended, 2 points is maybe a good amount to just get your rate substantially lower and save a lot of money towards 30 years. Or maybe, just maybe, you hold off on buying for a while until the monthly payment, even with a higher rate, makes sense. Now, you may say, well, I'll never get to that point. Well, remember, it either works for you to buy or it doesn't work for you to buy. And if it doesn't work for you to buy, there's 2 things you can do. You can wait, or you can move to a different area. Other than that, you have to be aware of the numbers. Don't just go talk to a lender and get pre-qualified without doing any of this research beforehand.